So today is day 2 of doing a daily review of the trades that I took and price action every single day for 100 days. The whole purpose of this series is to shift my focus from being on P&L to the actual process and how I trade. So jumping into it, we had a gap up overnight. It was a pretty big gap up too. So if you look from down here, 640 all the way up to 895. So over 1,240 points or so. It's the exact same setup that I took yesterday. If you have an A-grade setup and you know how to execute it, then when you see them occur, it's worth going big on them. So I did go pretty big on this. I took it on a couple of accounts across Top Step and my personal account as well. So anyway, let's break down the price action though. So like I said, big gap up overnight. On the open, you then get a push up and outside bar for the bears, which if it had follow through would potentially be a sign of strength for the bears. And after a big gap up, you can often get a bit of a deeper pullback or at least a 2-leg pullback. When they fail to get any follow through on it, this candle closing as a doji, we then see this trading range behavior. So this is the opening range, and then we stay in that range all the way through here. So that's the range. This is the H1. So we get a move up, a pull back. The H1 is the first candle to go above. So that's the first candle, the H1. Price then wicked back down and then closed as an outside bar, creating a H2. This is right before the highs as well. And so I entered on this H2. You can see my exact entry, 54,085 right there. From here, we then got a bit of a pullback, and you, on an outside bar, similar to this one, you definitely want to see it go straight away. So this did make me a little bit nervous, but we are holding outside of the range, again. And now at this point, price is just really consolidating and allowing these EMAs to catch up. It's not a deep pullback. There's no strength for the bears, that's for sure. And so I wasn't too nervous at this point. My stop was below low of day. From here, we then get a bull channel that is 10 bars without a pullback, painted bars with follow through on them as well. And so this micro bull channel was also coming into a key swing high. So when we got this bar, which a very big bar, at least compared to the other bars late in a trend, can sometimes signal exhaustion. So when we didn't get immediately a push up, we sort of hovered here for a second. I just got out of the trade. I was up 500, sorry, not 500 points. That was yesterday. I was up over 200 points. Like I said, I had taken this trade across multiple accounts as well. So I was in for quite a sizable amount. And so I was happy to get out right here. We then get a 2-legged pullback to the EMA after we stall at the highs here. And so as we then got a H2, I decided to take this H2 expecting a nice strong reaction off the EMAs. I got out of this long up here for just 50 points. I probably should have held, but I didn't like how we were stalling at this high. So every pullback is a range. So if I draw this range on, I saw us as moving up and then having a second attempt up and sort of stalling at the high of this range and at the high of day. So I got out of the long here. At the time, and this was a very bad trade from me, but at the time, this candle here was printing as an outside bear bar. And so I actually entered short as it created an outside bear bar, because it looked as though it was going to create a nice double top pattern as well as this wedge top. So that was a bad entry. I then got out immediately when there was no follow through, and when it printed as an outside bull bar. So at that point, I also decided to reverse my trade, realizing I was wrong on the initial trade idea. I got long in here, and then I covered after a bit of a move up. So I was able to make over 210 points on this long after losing 50 points on this short. So these two, this long and this short, sort of cancelled each other out, and then I was able to make another 210 points on this. So overall, 400 points on the day in terms of the trades that I took. If we continue to break down price action and look for any other really good entries, I do think that getting long in here was a good entry on my part. We're holding outside of the pullback range. We're holding above the, we've created a new high close. We're holding above the high close. And in a bull channel, the probability is that it should continue. Later into the day, by this point, tight bull channel, again, I find them hard to trade. So I don't see any good trades in here. When you get an outside bar with no follow through, that is potentially a sign that we're slowing down. It's a tight range at the top here, and I don't think tight ranges or tight channels are worth trading. There's just not enough room on either side to be making a lot of points or entering with any real confidence. So yeah, that's Tuesday's price action. We made 400 points, 500 points on Monday. So it's been a really good start to the week. In terms of sticking to my plan and sticking to my rules, that has also been really good. I've had a good read on price action as well. So let's hope we can take this across to Wednesday. Unfortunately, Wednesday will not be opening with a gap up. So the gap up H2 is not on the cards for Wednesday. But we move forward with confidence from the previous 2 days and look forward to bringing you a review of Wednesday shortly.